Welcome to ECN Trade Daily Video. Before we begin, it should be noted that any advice is of a general nature only and that your personal circumstances have not been taken into consideration.
Hello everyone, my name is Rob Clayton and thank you for joining me. The bullish momentum was clearly evident on Wednesday as the Australian dollar now reaches its mark at 67 cents and looks towards the next target seen at 67.45. A break there would give further scope to the upside and look towards the region of 68 cents. Any pullback, I feel the market will find demand around the 66.75 and a base still holding at 65.7080, where the 60-day moving average now supports around 66.01. Turning to the euro, trading volumes remain subdued, but that didn't deter euro-dollar bulls from pushing the market higher, while others prepared for the upcoming holiday shortened session, with the market in the US closed for Independence Day. The US dollar index, meanwhile, tumbled from 105.65 to 105.30, as Wednesday's economic data showed that the ADP employment report and the weekly jobless claims suggested a softening labour market, boosting expectations of the Federal Reserve's interest rate cuts possibly now turning to this month in July, while many look towards September. The ADP employment change showed 150,000 new positions in June, following the additional of 152,000 positions in May, while initial unemployment claims rose to 238,000 for the week ending in June 29, slightly above forecasts. We also received the Federal Open Market Committee, or the FOMC, minutes from the recent meeting, and noting that most participants observed a gradual cooling in the US economic growth. With the US markets now being closed on Thursday for Independence Day, the US session will resume normal hours on Friday, as all eyes turn to the Labour Department when they release the June non-farm payrolls report, with forecasts expecting a slowdown in hiring to 194,000 jobs added in June from 272,000 jobs in May. So turning to the technicals, the market is very close now to claiming the 108.30.40 target. If the dollar does weaken, which I do anticipate, could see a further move to the upside and expect a rally on to the level around 109 and reassess. Any pullback to be limited and support seen around 107.30.40 and a base still holding, that is, at 106.70.75. The fragile Japanese yen again was whipsawed overnight after posting a 38-year low against the US dollar. However, with the dollar slipping to 105.30, with the US reports coming out, the market is still somewhat wavering, and we can see here an engulfing candle which could see further weakness down towards 160 2025. A break there would give further indication to the bearish case and look towards this trend line, which is seen around 158 figure 40. With buckling technicals does support, eventually this market will give way to the downside, as it has for some time now been holding in an uptrend. All eyes now turn to the UK election, and no doubt the market will be somewhat whipsawed due to the US being absent. Still, the last two bullish candles have supported the market to extend further and maybe on towards 128 or 129, where I feel may see some profit taking emerge. And if so, then we see a pullback to around 127. Nevertheless, the bulls are still in control, and with the market still holding to a positive case from the technicals, I feel the downside will be limited. Turning to gold, well, since the break of 2,342, the market is extended and now negated the downside target, which was seen at 2,250.70. With the move, could see further to 2,373 and on to 2,380, where profit taking may emerge, as we can see back here in May. Profit taking was quite heavy. From the break of 2,342, I feel support will probably be likely lingering around there, so do be on your guard in case we see a bounce if any pullback emerges. Wrapping up with oil, the market was a little bit whipsawed and bounces off that break level of $82, but still buckling technicals could see a further weakness and re-challenge this area, and maybe even falling through that level and heading back towards the bottom side of its range, somewhere around $80 a barrel, and reassess from there. Well, that's a wrap. Thank you for joining me, and as always, look out for the intraday report, and I hope you enjoy the great start to the day.